Hello everybody, thank you for attending our webinar today on the R&D tax credit. My name is George Skelton and I'm going to take you through this, what will be a kind of whistle-stop tour of the R&D tax credit today. Before we get started, I have a little bit of housekeeping, if you like, for want of a better word, on how to make sure that this webinar is the best experience as it can be for you. So we find that to get the most out of webinar, it's better if you close out of any other applications you might have open on your computer, any website, Skype, email, etc. Okay. If you have any questions during the webinar, please feel free to use the bar that's there for you. You can just type the question in there and I will try to answer them as we go along. If not, because time is such a constraint, we leave them till the end, and if I don't get to them then, I'll make sure to respond to each of you individually. Okay. Finally, if you want to remove or reduce your control panel so that you can see the slides a bit more clearly, you just need to click that red arrow in the top left-hand corner. Okay. So before we get started then, I just want to give you a brief overview of who RDA accountants are. Well, we've 4 offices in Wexford, Kilkenny, Carlow and Dublin. The Carlow office has come about as a result of a recent merger with R.J. Smith & Co. There's 23 qualified professionals with over 250 years of combined consultancy experience and provided to over 2,500 businesses at this stage. Our core service areas are taxation, audit and compliance, financial services and planning, and business advisory. And we're also an approved service provider with Enterprise Ireland for lean financial business. Okay. A little bit about myself then before we get started, and it really will be a little bit because I don't like talking about myself, but most importantly I am a qualified tax advisor and I have been involved in a number of R&D tax credit claims. Okay. So as I said, this is a whistle-stop tour of the R&D tax credit, and what we hope to get through today in the limited time that we have is to look at what exactly is the R&D tax credit, what are the qualifying conditions for the credit, what might qualify as qualifying activities, and how to make a claim. Okay. So what is the R&D tax credit? Well, this is the burning issue, I suppose. The R&D tax credit is a credit available based at 25% of any qualifying R&D expenditure incurred by a company. It's a very attractive tax credit on the basis that not only do you get a 25% credit, but the expenditure is still deducted at 12.5% in your corporation tax return. So as a kind of brief example, if a company had €100,000 in qualifying R&D expenditure, their credit would be €25,000, and that would be credited against their corporation tax liability at the end of the year. So if that company had a €50,000 corporation tax liability, that would be reduced by the €25,000 tax credit, leaving a tax liability of €25,000. In a situation where the company is loss-making or doesn't have a corporation tax liability, then the credit can actually be refunded to that company. The key point here is that the credit is actually refunded over 3 years. So split 33% in the first year, 33.5% in the second year, and 33.5% in the third year. To get this refund, the refund cannot exceed the company's corporation tax liability for the previous 10 years or the company's payroll costs or payroll taxes for this year and the preceding year. Okay, so there is a cap on the refund, but still we've claimed it for a number of our clients, and it can be a great boost to cash flow, especially when quite a bit of expenditure is being put into R&D in the hope of growing the company going forward. The reason I keep saying company is because the R&D tax credit is only available to companies who are under the scope of Irish tax. Okay, it's not, so if you have a sole trader business, unfortunately you cannot claim the R&D tax credit. Okay, and maybe if you do have a sole trader business that's carrying out significant R&D, then it might make sense that you incorporate that business. Okay, so we know what the credit is. Now we need to consider, does my business qualify for this credit? Does the expenditure that I'm incurring on research and development qualify for this credit? Okay, so there's two tests which have to be met: the science test and the accountancy test. The science test essentially means that the expenditure is incurred on qualifying research and development activities, and we're going to look at this in a little bit more detail in the next slides. The accountancy test is that the expenditure is claimed correctly within the guidelines of the legislation, and that a clear record is kept of this claim to support this claim. Okay. So what are qualifying activities for R&D? This is where it gets difficult, okay? This is a massive, well, I won't say a grey area, but open to interpretation, okay? So qualifying activities must satisfy all of the following conditions, and I'll point you to the word all. They must be systematic, investigative, or experimental activities in a field of science or technology, okay? And they must consist of one or more categories of research and development: basic research, applied research, or experimental development. And in addition to this, they must seek to achieve scientific or technological advancement and involve the resolution of scientific or technological uncertainty. Okay, and these are key words: seek to achieve advancement and involve the resolution of scientific or technological uncertainty. There is no obligation that you succeed in seeking the technological advancement, other that you seek to achieve this scientific or technological advancement. So expenditure incurred on a project that bears no fruit ultimately may still qualify for the R&D tax credit, provided these conditions are met. Basic applied research, experimental development. I guess everybody, when they think about R&D, has a picture in their head of scientists in a laboratory with white coats. That's not always the case. It could be experimental development where a company is working on a new product, or it could be a new process within your own company. You can have applied research when you're applying that research to a specific outcome. Okay, so really and truly any company in Ireland could be carrying out R&D activity which might qualify, as long as that R&D activity is seeking to achieve a scientific or technological advancement and involves the resolution of scientific or technological uncertainty. So we have some examples of this on the slide in front of you now. So when considering all of these, you need to consider the point. So the first one, developing a new product. Is the company developing a new product, and is there uncertainty as to the outcome of the development of that product? Is the company seeking an advancement in the sector from which they operate? Okay. I suppose an example that I sometimes use with my clients is that everybody knows if you put red and yellow together, you get orange. So putting red and yellow together and getting orange is not research and development. It's using two materials and getting an outcome that everyone is well aware of. So in a more, I suppose, defined case, you might have trade journals within the sector in which you operate, and those trade journals will publish articles in each of their publications. And if those articles outline an outcome that you're now seeking research and development activity on, if it's known, if the article has said that if you mix these materials together you'll get X or Y, then you mixing those materials together in the search of X or Y is not a resolution of uncertainty. It's not uncertain, it's known because it's been done and it's been published. Okay. Now that doesn't mean that if you're seeking an advancement and your competitor is seeking the same advancement at the same time that it won't qualify, because it won't be known to you, and the findings of his research or her research will not be known to you. So of course it's fine for you then to undertake your own research and development to seek an advancement there, and to kind of resolve the uncertainty that arises. So like I said, some examples then might be developing a new product or improving an existing product. So I guess I have a Samsung S5, I think, and I got an email yesterday to say there's a new S6. Okay. That doesn't mean that there wasn't research and development on the S6, okay? Samsung had a product, the S5. They no doubt incurred research and development in trying to improve that product, and now there's an S6. It's the same with any iPhones or any other phone. There might be any computer product, any product basically. If you have an existing product that you want to improve and you don't know how to improve it, or if you don't know the way that you want to improve it can be achieved, then the research and development that you undertake to improve that product can be allowable, again, as long as there's some uncertainty to the outcome. Similarly, in developing a new process or improving an existing process, any improvements to plant performance or improving energy efficiency, improvements to production or output, waste reduction, yield improvement, substitution of raw materials. So, for instance, if your product has been made with steel, but you find an alternative solution and you want to use a different material, but you need to test to see if it's suitable, if it'll have the required strength and durability, and that answer again is unknown, when that is qualifying R&D and expenditure. The development of product specifications for customers or suppliers. So they might come to you with an issue, and between you will look to find a resolution to that issue. And the use of universities or external experts to assist developments in your business? I see someone has got out ahead of me and they've asked a question in terms of the use of universities and what can be claimed on the use of a university. Well, essentially, if you employ a university or a third party to undertake R&D expenditure on behalf of your company, well, then you can claim the credit on that expenditure subject to certain limits. And those limits are essentially, in relation to universities, it's limited to 5% of your company's own total R&D expenditure. And in the case of external experts, it's 15% of your company's own R&D expenditure. Okay? So we've discussed what might qualify in terms of the activities involved. And like I said, there is no limit on what might qualify in terms of your own company or any product that's being produced, only that the company sought an advancement in technology and there was some uncertainty to the outcome before the research and development was undertaken. So you've now identified those activities. You're happy that that is the case. You need to consider, well, okay, what actual expenditure will qualify for the R&D tax credit. This is a key point here in that the relief can be claimed for revenue expenditure, including salaries, overheads and other costs incurred in carrying out the R&D work. The key point here is are the words "in carrying out." In a lot of other areas of tax legislation, the words "for the purposes of" might be used, and that's far broader. The words "in carrying out" are narrower in their scope, and what it essentially means that it's only costs that are wholly and exclusively incurred in actually carrying out the R&D work, physically carrying out the R&D work. So that, of course, would include the salaries of the staff who are involved in the work, any overheads, so any light, heat, electricity, any other utilities used, and any other costs incurred. Okay, there might also be relief for expenditure incurred on plant machinery or certain buildings used in the carrying out of R&D. So plant and machinery, if plant or machinery has to be incurred for you to undertake this R&D activity, well then the expenditure on that machinery is potentially allowable within the claim. If the machinery is used for both R&D and non-R&D purposes, then it needs to be apportioned between R&D and non-R&D. So if, for example, 20% of the time the machine was used for R&D, well, then 20% of the cost of the machine would be allowable in your claim. Okay. With regards to buildings, if buildings which would qualify for industrial building allowance and over 35% of that building is used for the purposes of R&D, well, then the cost of that building might be allowed in terms of the R&D claim. So you'd have to be really carrying on significant R&D within your company before that will become an issue, but it's certainly something that we have seen. Okay, so they're the key points in carrying out in terms of revenue expenditure, and just to look to apportion any costs if you're dealing with plant machinery. So I suppose we've looked through qualifying activities and we've considered the expenditure. I think now would be an interesting time just to see how many of you have actually incurred R&D expenditure. And I'm going to launch a poll now and maybe give you 20 or 30 seconds to click yes or no, very simple. And I'll then publish the results and we'll see what we can take from that. Okay. So I'll give you 5 or 6 more seconds and we'll take it from there. Okay. So I'm going to share the poll, and it looks like 43% of the people here are actually carrying out R&D activities, which is quite interesting. It's almost half. So I suppose for you people, it's important that you consider that the activities that you're claiming qualify for the relief, that the expenditure qualifies for relief, and that the relief is being claimed correctly. And what we're going to consider now is how exactly that relief is claimed and what records should be retained. Okay. So how to make a claim for R&D? It's actually very straightforward. The claim is included in the company's CT1, which is essentially the company's corporation tax return for the period. Okay. While claiming the relief is pretty straightforward, there is a limit on the time involved. Okay. The claim must be made within 12 months of the end of the accounting period in which expenditure was incurred. I've had numerous clients come to me, or potential clients, query the R&D tax credit. And when we sit down and discuss the point further, it turns out the actual qualifying expenditure was incurred maybe 24, 36 months previously, and we can't claim the relief now because that time limit has been exceeded. And it's a real pity because there could have been significant cash flow brought into the company in terms of the relief that might have been available. So, I mean, if in your company you're claiming you have R&D expenditure now, it's important that the relief is made in time. So make sure your accountant is filing your CT1 on time. That's absolutely massive. And make sure the R&D expenditure is identified within that time frame. Okay. Like I said, while claiming the relief is relatively straightforward, calculating the relief, not so much. Okay. I suppose that's where it's important that you consider the expenditure. Is it used in carrying out the R&D activities completely? What we do here in RDA is that for any clients that claim the R&D tax credit, we put a support file behind that. I prepare an R&D tax credit report that can range from anywhere between 50 to 150 pages that outlines the information that's required for revenue purposes, how the relief is being calculated, why the expenditure qualifies, what activities have been undertaken. Everything that's required by revenue is should they test the claim. And from what we're hearing, that's becoming more and more relevant now because revenue are auditing this claim on a fairly regular basis. And it is something that they can come in and if they think, not necessarily that the R&D activity isn't R&D, but that the expenditure has been claimed too broadly. Like I said, that maybe some expenses that didn't relate wholly and exclusively to the carrying out of the R&D have been claimed. Okay, so it's important that everything is nailed down from the start and the correct claim is made, okay, and that this information that's on the screen now is retained in the case of any revenue review. So what needs to be retained and what typically we would include in our R&D tax credit report is a description of the research and development activities, the field of science and technology concerned, the scientific or technological advancement that is the goal of the research and development activities, the scientific and technological uncertainty the company is seeking to resolve by those activities, details of the systematic investigation undertaken, the qualifications, skill and experience of the project manager, and the numbers, qualifications and skill levels of the other personnel working on the project. Okay, so all these points are very relevant and very important that a clear record is kept. I think in most cases, if your company is carrying out R&D, that this will be par for the course in any way, because you're not going to sit down and instigate a project to develop a new product or a new process and not clearly set out the goal of the research, not clearly set out the work to be performed, you not clearly identify the people who are going to undertake the research. So while you mightn't have formulated what's required in an R&D tax credit report, you probably will have that information easily to hand, okay? As well as keeping this information, you do of course have to keep the records to support the expenditure on the claim. So any invoices incurred, I suppose in a lot of cases salaries make up the largest part of the claim. So if possible, the staff involved in the R&D should maintain timesheets to split their time between any R&D expenditure or any R&D time versus non-R&D work, okay? So they can clearly identify it, and timesheets are the most obvious way of doing this. All records that you typically maintain for your business in any case, you must maintain those records in support of the R&D tax credit claim. Okay. Okay. Well, I suppose we're near. I think we're at 19 minutes now, and just before I wrap up, I want to just make an offer that if any have any questions about the R&D tax credit, we'd be more than happy to help you with that. If you want to call me or contact me directly by email, my email address is gskelton@rda.ie, and I'm here in our Wexford office most days at 053 91 70507, and we'll come back to you as quick as we can on any queries you might have. Okay, well, thank you very much for attending our webinar today. I look forward to hearing from you in the future. Thanks very much.